The Hedgeless Horseman here. It's April 26, 2022. Uh, Another interesting day in the markets, and just another example of markets, being markets. I mean, if you still, let's say, think that the market is so rational, etc. I mean, how do you explain today's movement, for example? I mean, typically I lambast, market participants for like, okay, gold is down 1% on any given day. Someone decides to sell, one of the best high quality juniors around, let's say, at 5 to 10% cheaper than you could have bought shares of the company the previous day. I mean, that alone makes no sense unless something specific happened with that actual company. I mean, it could obviously start from being an overvalued position, overvalued valuation, and it actually should go down. But like right now, for example, during a sentiment bottom, there's almost no junior out there that is actually expensive. So I mean, if this market was quote rational, they would simply go up like, I don't know, 50 to 100% tomorrow, which they're not going to do, obviously, because that's not how the market works. The market is not rational. Case in point today, because if it makes little sense that something that is already cheap sells off because gold is down 1%. Today, gold was up 0.55%. And still, GDXJ is down 2.73%. How can that be? It's almost like the market has, no idea what it's doing. It's almost like this is sentiment driven or forced liquidation. It's like, you see example after example after example. Don't take Mr. Market seriously, especially during lows in sentiment. I mean, this is a joke. It's a joke. This was a total joke. So every time the market is a joke, typically never hurts to buy. But the funny thing is that I've recently seen today, which is typical during these sell-offs, people start talking about, like someone commented on Twitter, that, well, if it's down 10% today, it can go down 10% tomorrow and 10% the day after that. I mean, of course it can. Any stock, anything can go down 10% every day for 300 days straight. But if that's your mentality, you will never buy the low. Because that mentality is like, well, it's gone down so much. What stops this trend from what stops this trend from going to zero? That is basically it. That is how people work. Projecting every trend at any given time forever forward. So when it is like after a crash, people still project, well, it can always go to zero. And when it's been ramping for quite some time, and maybe even some juniors are expensive already, it's like, hey, there's nothing that says this can't go up forever. I mean, you're always gonna see that. And it's like, and I some playing a bit of devil's advocate, aired the idea. Well, because I had made a tweet that we're winning all the time simply by refusing to sell cheap. I mean, that is my simple strategy. I have two conditions. If it's undervalued, I buy. If it's overvalued, I sell to buy something other that is undervalued. I don't care what rates are doing. I don't care where gold is heading. I have yet to sell or buy a stock, I think, based on where I think gold is gonna go in the short term. I've never sold out of any stock depending on what I think rates are going to be, or if it's going to be a full moon, or what Biden is saying, or yada yada yada. I simply think this is a terminally ill financial system. And on that point, someone, aired the thought that, hey, you can say that you're winning because the juniors can go bankrupt and can go down 80%, etc. So again, that's just typical bottom talk, and nobody's talking about bankruptcy up here. Can tell you that. But when they're pretty much pricing in a good chance of asteroid mining happening or whatever, then people suddenly focus more on risks. This is where here risks were actually high as well. At this point in time, you had very, a lot of almost bankrupt companies. Producer weren't making any money. Gold was at 1100. Juniors had problem getting cash. What's the environment today? Gold is at $1,900. Producers are making good money, more cashed up than probably they've been in like the last 2 decades at least. And juniors are typically very well cashed up. You see a lot of upsized financings. So smart money, you can see this in the SERI filings. Insiders are still buying. Institutions, smart money are buying, but they typically buy in private placements. But where the retail monkey, let's say, plays around, it's obviously in the open market. Because if there's low trading volumes, it's hard for anyone to take a fairly large position in any given stock, especially during low volume periods. So it's like, most are not even close to bankrupt. Goliath, cashed up as hell. One of the absolutely best, highest tier exploration story out there. Why on earth is that down, today or yesterday, etc.? Did something change? Did gold going up 0.55% suddenly decrease the value of that project? Of course not. If anything, it upped it, even though I don't think you should really read too much into what gold is doing on any given day. But it's just this market is totally irrational. My simple strategy, as always, is simply buy when it's undervalued. Buy when it's undervalued, because there's a higher likelihood of sentiment turning up someday than asteroid mining happening anytime soon. And it's like another point which is kind of interesting. Today, if you probably noticed, but like markets are crashing. They don't look too good. Commodities are actually doing well overall. Cryptos are kind of crashing. Okay, so it's like it's a bad out there. And gold is up, paper gold is up, but miners and juniors are down. So it's like nothing out of that makes any real sense, obviously, except sentiment, forced liquidity, de-risking margin calls, etc. I was like, play with this thought, given that how bad it is out there, and the real food inflation, let's say, from the Ukraine war hasn't even started for real. And oil doesn't seem to want to go down below $100 per barrel. And you see rates going up, and mortgage rates going up. So things are not improving out there. And it's probably going to get a lot worse. And obviously, this fiat bubble hasn't even imploded yet. So it's like we're not even close to like the full effects of an end game or aftermath. So just argued this, given that juniors are like generationally cheap relative to gold and major miners and probably medium-sized miners, they're cashed up and typically not even close to being bankrupt. What would happen if, let's say, I mean, take this LME to scrap, that's the London Metal Exchange, to scrap gold and silver futures by July due to thin activity. I mean, most people know it's a huge paper scheme, basically. I mean, comics, for example, there's like, I don't know what the exact numbers are today, but I remember there being like, 70 owners to every ounce of gold. So if everybody wanted, every paper gold holder wanted wanted actual physical gold, comics would default 70 times over. So I'm just saying that play with the idea, like, okay, you're seeing the markets crash. Things are typically getting worse and worse. You're seeing threats of nuclear action, etc., from Russia. Like, what would happen if things in the gold and silver paper space suddenly became a bit chaotic? Like you saw in the nickel market, which went up 300% in a week or two. I mean, I don't think the risk is zero that there is some kind of force majeure going forward, because if it might not look like it, but I'm betting that there's quite a lot of physical buying out there, and the masses haven't even woken up yet, because I mean, crypto, for God's sake, is still up. I mean, these would pretty much be near zero if the masses were really spooked. So that hasn't yet happened. But it's like, what do you think the odds are that when shit really hits the fan, or keeps hitting the fan, that there might be some kind of problem with holding paper gold, and the ones who want physical might not all be able to get physical? So let's play with the idea that there is a rush for physical, that people don't trust the paper products anymore, perhaps not even GLD. If you can't get gold, and let's say it's getting hard to get silver as well, which we've seen many times over the last few years, and huge premiums. I mean, there's only one natural step beyond that, except buying platinum or palladium, etc. If you cannot buy physical gold at almost any price, and that starts to seep into the public awareness that shit's hitting the fan. There's talk about you can't even get gold. But gold is starting to ramp, let's say, because the fiat system is getting wobbly. Do you think that some might, for some reason, decide to, think, Jesus Christ, I cannot get hold of physical gold or silver? The next natural step is actually to buy it in the ground. And that is my reason for basically that's what I think can happen, and that could happen anytime. That's I mean first, consider the risk reward here. These are the sentiment levels. They're absurdly low. And like we've seen today, they get flushed on gold being up. So sentiment levels are absurdly low. The supply demand picture for almost any metal is increasingly favorable for the future supply, because we're not finding enough and not putting enough into production. Okay, so that's the macro tailwind is great. For gold, the macro tailwind is great because things are getting worse and worse out there, and inflation is obviously ramping, and you read headlines all the time of shortages of food, whatever. So it's like real assets, etc., is going up, having a huge tailwind. You have a geopolitical risk all over the place. You have World War III headlines. Everything says to me that physical gold, has the best risk reward. every asset, unlevered physical gold. And again, we're not even close to the masses really figuring out how bad it is, obviously. I mean, there's no panic really. I mean, the markets, yes, they're, crashing today, but that's from almost all-time highs. So the masses haven't even begun to figure out how, let's say, bad things are. So how, and we already see, central banks buying up stuff. I've seen some Swedish dealers, it's hard to get a hold of gold bars, for example. There's like a 3 weeks delivery time. So what happens, like how much more of the public actually need to wake up? Let's say, 1% or whatever. And it might get almost, I wouldn't say impossible, but very hard to get physical. And then imagine we're actually going into this becoming a public crisis of sorts. And there it becomes a fear of need for physical gold, silver, and you can't get it. Where are they gonna go? I think we're gonna, at the end of this, I think we're gonna see again the mother of all bull markets in gold and mining, and not just for gold probably. So it's like these are the risks to the upside I see, and why the risk reward is so absurd. I mean, uh, from a micro sentiment perspective, we're at a low. Relative to, I mean, we could be at a low, and juniors could be, fairly valued. They're not even close to fairly valued. So sentiment has risks to the upside. Almost the glass is almost fully empty, but it can get, of course, a bit worse. You have to be prepared for that. You're never gonna catch the exact bottom. So I wouldn't be totally surprised to, like, even though my some stocks are down like 40-50%, might go down 20-30% more. It's like I'm that is in the realms of possibilities, but they're still, in my opinion, way too cheap to sell. You can find the highest tier juniors out there down like 50% from recent highs. They don't make any more top tier stories. That's it. That's even rarer than gold. The actual top tier stories out there of with the possibility of future large or high margin mines, etc. That is finite supply, extremely finite supply, and we've been able to convert fiat obviously to ownership of said finite supply uh, at better and better terms over the last 2 days. So it's a no-brainer. I mean, you could literally pick up whatever you want, and it's not going to be overvalued. And you can pick up tier one projects for pennies on the dollar, and that's when you have sentiment levels down here. You have valuations absolutely atrociously low, and you have the tailwinds of the mining business itself, the picture for gold, silver, and then you have the tailwinds of a global financial system that's basically the wheels are coming off, and it's probably going to get even worse. I could not imagine a better risk reward scenario for gold or miners. And again, what I think might happen is that there becomes a fear of need to get gold and silver. I don't know if that's in 1 year, 2 years, 3 years, 4 years, 5 years. And then when you can get that, the only, the natural next step is to actually buy physical gold in the ground. Because it might, it's there's no rush like a gold rush. So it's like, again, if you want to think about the downside from here, or if you know that, hey, I cannot cope with something that is cheap going down, I mean, yeah, of course you should probably sell. You're never going to beat the market, in my opinion, but that's another story. So, like, I think you should be prepared for all eventualities. It's like, obviously, like you saw today, there is no law against the market being stupid. We might go lower for 6 months still. But it's the very fact that the market is stupid which makes it, pretty easy actually. The only thing you have to be able to do is like have a firm grasp of the obvious, and staying power. That's why I don't use leverage, because I don't want a time limit on stupidity. Because I think the median voter out there, and the stuff you see, comments from let's say the left. I mean, I think the world is going crazy, especially the Western world. So should I be surprised that it's like the crazier people get, the more irrational the markets get? No. And like always, like price going down is not really a problem for me. I mean, if that's my worst problem, you have very few problems. My fear is that I'm overpaying for anything that should go down and stay down and thus create a permanent loss. Buying something here that should be trading up here at least, let's say, that's not risk. I'm very fortunate in that case because it's going to reach this level one of these days. And even if that's 100% from here, you could wait years for that and it will still be worth it. But as we know, most people want a 10-bagger and they have a investing horizon of 1 week. Now, just like always, became a longer rant than intended. To sum up, I mean, I don't think you need more evidence than today to really, really start understanding that Mr. Market is just the marginal buyer and seller, basically. It's not some efficient pricing machine or anything like that. Don't worship Mr. Market. That the market is always right. It's like that's I have the opposite approach. The market is always wrong. And again, it's like being right and the market, let's say, agreeing with you. Those typically don't happen on the same day. I mean, this might be a superb buy, even if you bought here, let's say here, this might have been a superb buy, and you're looking, that was a bad buy because we're down here. Well, let's say this was cheap, and let's say this blue stock, strategic metals, is up here in 2 years, and let's say that's a 200% return. Even if you went down like, I don't know, 50% at first, then up to 100, that's still let's say 100% return from here in 2 years. That's absolutely insane returns. So I'm getting quite tired of people thinking that you made a mistake anytime you sit with a paper loss. Like I showed in my, I think, second last video, I've been down over 50% 4 times. And that still didn't stop the compounding. Yeah, to sum up, this market is a joke. The junior sector is an absolute joke. Don't take it seriously. Be amused instead. Know that the market is stupid and can be stupid for a long time. We might be 1 day away from a bottom, weeks away from a bottom, months away from a bottom, years away from a bottom. And the only way I can lose, in my opinion, if I buy something that's overvalued and should go down and stay down. Otherwise, there's a option, let's say, because sentiment will always turn back. And then you have all the tailwinds of what's actually happening, like dirt cheap valuations, a war, inflation, yada yada yada, a paper gold market that's a joke. You have sentiment at near, at least near major bottom levels. So it's like, yeah, we have it pretty good actually. It's like wiring more money tomorrow. I saw some very high quality stocks out there. It's like, I mean, they don't make more SK Creek districts, for example. So I don't care what price of gold or silver is. Like some of these top tier assets, for example, they will be top tier regardless if gold is at 1,000 or 2,000 or 3,000. Those assets are much rarer than the gold itself, because that's a very extremely finite supply. So I'm an asset hoarder. I'm buying up all the future supply. I'm buying up as much future supply as I can, because we're gonna need it, and it's gonna be worth a lot someday in the future, and especially if there's some force majeure in the paper markets, etc. That future supply or ounces in the ground might get a real jolt, and I think you better be in before that happens, because who knows how quickly that can go up. Like always, like you're either too early or too late. And if you're too late, it's too late. Thanks for listening. Consider me biased. Do your own due diligence. Bye.